Well, welcome back to Market Moves. Our guest today, Roger Montgomery from rogermontgomery.com. What are your thoughts on Brambles then? Where do you see its value? It was down, what, 2.5% to $6.49 today?
What's really interesting about this company is that if you look at it over a long period of time, you know, not just sort of the last 6 months or year or whatever, you actually find the share price hasn't changed a lot for something like 12 years. Mm-hmm. You know, the share price is about where it was 12 or 13 years ago. And there's a reason for that. Over long periods of time, share prices tend to track values, and the value for this business hasn't changed very much. The reason, look, fundamentally, and I know it's going to sound a little bit flippant, but it's really, really hard to keep track of those pallets. You know, I can remember as a kid, and I hope I don't get in trouble for it, but as a kid I can remember finding pallets, and we used to make BMX ramps out of them, you know, and that's a lost pallet, you know. So, you know, it's probably partly my fault. But I'm sure I'm not the only one that's seen a stack of pallets sitting idle for 20 years. You know, I was down in Melbourne only a couple of weeks ago, and I remember seeing a stack of them on a train platform, and they don't look like they've moved for years. You know, so it's just I think it's a difficult business, and as a result, the returns on equity are modest. You know, they're not attractive rates of return on equity, and the value of the business hasn't changed that much in a long time, and that's reflected in the share price as well.
All right, now, of course, what viewers would have been waiting for, you talked about those
Sure.
4 stocks that you like. This is our Outperform segment. And these
I love that little music and intro. I mean, it sounds so dramatic, doesn't it?
Yeah, absolutely. So what are these 4 stocks that you've been mentioning that you think are cheap?
Okay, I think, and I've talked about the first one before, JB Hi-Fi, I think, is a terrific business. It still looks cheap, believe it or not. Now, I know most people will have a look at the share price and they can see it up there on the screen, yeah, and they'll say, well, it's gone up so much, and you know, so I'm not going to buy it now. Now it's gone down a little bit. Oh, well, it's going down, so that can't be good, so I'm not going to buy it. So there's all these reasons why, you know, people won't buy stocks. And putting that aside, the business is probably worth $20 at the moment, or thereabouts, roughly $20, and I think that value will increase quite dramatically over the next 2 years. Now, the second one, in fact, I think the intrinsic value will rise at about 18% a year for the next couple of years. The next one is Oriton, another retailer, and retailers are on the nose a bit at the moment, and so that's why we're seeing a bit of value there, because when people don't like something because the thematics are wrong, or apparently the economy's going badly and retail's softening, people get scared, they sell retail shares, and as a result they become cheap. But Oriton and JB Hi-Fi are both wonderful businesses. Sally McDonald's done a great job, and I've got some statistics here for people. Prior to 2006, which is when Sally McDonald joined, return on equity averaged 27% at Oriton, which is a good result. But since she's joined, it's averaged 54%, which is a phenomenal result. You know, it's now around 80% return on equity, which is fantastic. Debt's also declined from $22 million back in 2005 to less than $6 million now. So you've got a business that has low debt, high rates of return on equity. Its value is probably 20% higher than the current share price. That's a big discount, you know, in a market that is otherwise expensive. Now, people will say to me again, you know, well, Rog, the market can't be that wrong. Well, let's see in time, yeah? I'm not recommending people go out and buy these things. The fact that there's only 4 companies that I can find that are actually cheap means that there's roughly 1,900 that are expensive. And if there's 1,900 that are expensive, you know, I think a cautious or patient approach to accumulating positions in good businesses when they're cheap is probably prudent. Do you want the other 2 as well?
Yeah, the other 2, definitely,
okay.
Please.
So the other 2, Nick Scali is a furniture business, and people may say, well, Nick Scali, Rog, its return on equity has declined over the last few years. That's true, but based on its prospects, it looks cheap. You have to agree that the analysts are getting it right in terms of what the future for this business is. If there are any downgrades, if there's any, you know, to next year's, you know, expectations, then it won't look so cheap. So just be careful of that one. The last one's actually a business that services the mining sector. It's a company called Monadelphous. Monadelphous has only been cheap twice in the last few years, and it looks like it's at a slight discount to its intrinsic value again today. When I say today, in the last few days, and that's not something that I've seen very often, because it is a very high quality business.
Wow, plenty there for people to have a look at and do their research on. And we did actually get a question question in from a viewer. Of course, here on Market Moves, we do ask you to send in your share questions to have them answered by our guests. So if you do have a question, please email us, marketmoves@skynews.com.au. And today's question came in from Andrew from Geelong, who said that he's been scanning the market, and from a technical perspective, Oraton Group, ORL, looks strong. What do you value the stock at now, and what are your projections for 2011, 2012? And it's interesting there that is one of those ones that you've been looking at.
Well, let me add a little bit more colour to the story. I think, in answer to the question, I think that that Oraton is trading at there's a gap of about 20% between the value and the price at the moment. So the price is at a discount to the intrinsic value. And on my estimates, I've got intrinsic value for Oraton rising by about 11% a year. So you've got a margin of safety there, what I call a safety margin, and you've also got rising intrinsic value of about 11% for the next couple of years. It's a business with modest levels of debt compared to its equity and very high rates of return on equity. You can't get 80% in a bank, and Sally McDonald's extracting 80% returns from the equity of this business. So the story looks very, very good. Any further declines in the share price, well, provided there's no decline in the value, that would tell me that that's an even more attractive opportunity. But as the disclaimer said right at the start, you've got to go and seek personal advice before you go and do anything.
Absolutely. Interesting though, Sally McDonald's actually going to be appearing on the Switzer show next week. So,
oh, fantastic.
Yeah, it'll be good to hear what her thoughts are. Yeah, possibly.
We went to uni together. So,
there you go. Yeah. Well, it'll be interesting to hear what Switzer asks her about her secrets and to the business.
But by the way, I think she has a stunning corporate career ahead of her. And her capabilities, I've got to say, are way beyond what she's currently doing at Oraton. I think she could do some terrific things in other businesses as well, and time will tell whether she does that.
Roger Montgomery, always great to have you on. Thank you
Pleasure.
so much.
Thanks, Bridie.
From rogermontgomery.com.